So welcome back, guys. We are currently in a tape reading of NQ. So this is the 1 minute time frame. So this is the E-mini futures. I'm currently hoping for the market because this is a Friday. I'm expecting a TGIF into these levels. So drawing this fib on the weekly range for this week, I'm looking at these fib levels. So if I'm to take you on the weekly time frame, right there you have the 20% of the weekly range, 30% and the 40%. So I'm expecting the market to drop lower coming into the 40% of the weekly range. Okay, so coming back on the 1 minute, where we are at right now, currently going into 11 a.m. I'm expecting the market to drop from this bearish fair value gap. We came back into these optimal trade entry levels, so we dropped, closing back below this. I'm not considering this, I'm considering this from the higher time frame. This is my wannabe breaker. So we drop, we come back into that one, trade to the sweet spot. If I'm to first put this away, for you to see clearly, we have a bearish fair value gap right there, that pink box. We have a breaker on the lower time frame for the 1 minute, and then we have these fib levels. So we drop and close below that. Okay, it doesn't come back immediately, we drop lower, coming into the sweet spot. So I'm expecting a drop. We are currently in an accumulation phase, but we took out sell side, so I'm expecting the market to continue lower and break structure. Okay, so that is my trade stop loss at the 1 fib level right there, expecting a drop into the 40% of the weekly range. This is the 30%, and you're having the 20% of the weekly range as this line. So if we are to look in just like that, I have a fair value gap right there that the market is trading into. This the bearish fair value gap. I would want to see that respected. That is a bearish fair value gap having a breaker into it. Now this is where it calls for your patience, and you would want to hold your trade. Now this is what ICT had emphasis on. Sorry, I didn't mark for you the macro. So this is the 1050, sorry, 1050 to 1110. This is the macro going into 11. So I'm watching this. I'm expecting the market to print for me price action that I will work with going into the launch macro at 11:30. And if I am to do it like, let me do it like this. I'm having this as my entry, make that blue, sorry, red. Yeah, that has to be red. And then this as my stop loss. I'm going to make that orange. You see, having that as orange, and then having this as my take profit as green. So this is take profit, having symmetrical price right there. I'm going to take that off, symmetrical price, and not need the negative, and I need that for my entry. Okay, this is my stop loss. just like that. I'm expecting this market to drop. This is my entry. Make this red. This red line is my entry, and then this green line is my take profit. So I'm making this green, my take profit. Okay, so I'm expecting the market to move a certain range of from this to that. So this is my expected range. Wow, 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 wow. What? So as you can see, we drop with speed. So I expect the market to continue just dropping lower into beautiful. So this would be my trade right there. Oh my god, this would be the trade I would have taken, just like that. Didn't even give me time to set the take profits and stop loss as well. So just like that. I don't know whether we'll have news or something, but that's what I expected for the day. This is Friday, and that is not random. Friday I expected the market to come back into, so this is the 20% of the range, 30% and the 40%. So this would be a take profit taken out. That would be a winner in just 2 candles. Sorry, this was my trade from that. I expected the market to drop from those levels going into that. Oh my god, wow, this is a big drop. I think something is happening in the market right now. But all in all, this, in any price action, whatever happens in the market can never violate technical analysis. So this is a big move, but it's also sponsored by this fair value gap coming into these optimal trade entry levels and this bearish fair value gap. That is beautiful. Okay, so if I'm to teach and let that go, if I'm to teach and let that go, that was beautiful. So let me put this off. Okay, so what are we having here? Why am I saying that had to work out? For the daily range, so this is, I'm going to be teaching you how the daily range works. So this is the daily range. Sorry, I'm going to be looking at the weekly range. Making this big, that was hilarious, and my mind is still stuck on that. So this is a lecture about the weekly range. So as you all know, the weekly range is just on the weekly time frame. We're going to be having a candle, as on the lower time frame there's going to be one candle represented by 4 days. So what do I want in the weekly range? I want, we have the open. Let me first draw it like this. If we go back into this price action, if you go back into this price action with the line target off into this, what led to that massive drop, that trade? So if I'm to have the weekly range, if this is a candle. How do I want the candle to be presented? First of all, I have the different parts of the candle. You know very well if you've been following. These are wicks, that and these are wicks. Now, what do these wicks say? These wicks tell us that the market at some point in price reached this price level and this price level. So where the candle starts from, this is my open. This is my open. This is my open right there. If I'm to make this black, that is my open. And where the candle ends, this is my close. Now, when does the weekly candle close? The weekly candle closes on Friday at 4 or after 4 p.m. a few minutes after 4 p.m. So this is the close and this is the open. Now the rest of this is the body, and these wicks do the damage, the bodies tell the story. So we are having, what do I expect the market to behave like at the open? So looking at the open, what happens at the open? The open will have accumulation of orders and building of market sentiment. So accumulation of orders, the market is pumping in fuel to sponsor the move that's going to go higher, and we are building market sentiment. The market is determining on whether that current week is going to move a bearish range or a bullish range. So we also have taking traders that we are on the right side of the market off their right bias, because no one in the market wants you to make money. By the way, everyone in the market gets when you lose money. So if you make money, no one benefits from that apart from you. So your broker, if you're using your brokerage through commissions, and those with little accounts have no commissions, they get through spreads. So anyway, at the open, we'll have building of market sentiment, accumulation of orders, taking those that had the right bias of their bias, and also manipulating traders into the wrong bias for the week. So if you are on the wrong side of the week, the market makers gain from that, because you're going to be placing trades that do not align with what they want the market to do. So I will have accumulation of orders, so I'll have the market spending some time at the open in a specific range. Now those that expected sales right here, all the support and resistance traders are going to see this as maybe a double top, and they will wish to sell. So what does this week do? The market dropping at the open, that is manipulation, or what we call the Judas swing. So we manipulate, making these who sold here farm of their bias, and they will hold trades, and then to lock them in place, and they will not be able to, they will not see it coming, to change their bias as soon as possible. So this is why we call this a Judas swing. This move that manipulates after the open to form the low of the week, and this I'm more likely to see this between Tuesday's London session going into Wednesday's New York session. So that's when I expect the low of the week to form. I'm going to show you everything. So I expect Monday to be my accumulation at the open, Tuesday going through to Wednesday, to be my manipulation or my Judas swing, then Thursday to expand, and Friday to come back into the range, giving me the closure to come back into the weekly range. So at the open, we have the manipulation right there, as this manipulation move traps these guys into the wrong bias, and also deprives those that had the right bias of buys of their bias, so they will be induced to sales. Now just imagine if you hoped for a bullish week and you see Monday accumulating and Tuesday falling down, obvious case your bias is going to turn going into sells if you are not competent with the market. And after that, what do the market makers do? They distribute price higher. Now this distribution is the right move that the market had to go in. Now this goes through Wednesday, Thursday, going into Friday. Then for the close, we expect Friday to come back into the market to an expected percentage of the week. So expect Friday to drop to come back into the range of the weekly time frame by 20%, if not 20, going further to 30% or to 40%, then giving us the accumulation at the close into the end of the week. So I would have something of this sort. Accumulate, we drop lower, putting in the daily week or the daily low, then we rally higher, putting in the high of the week, and coming back into a specific range to close for Friday. So I would have my fib on Friday on the weekly chart to measure and that's what ICT says. It's thank God it's Friday, because we expect the market to retest to either 20% of the range, 30% or 40% if the week is to close as that. So expect the market to drop to that, coming into this range. We expect this from the market. That. Now this is what we have had today. We had the market printing in the high of the week. If we do not surpass that in the PM session, we have the high of the week. Then 9:30 opening bell to 10 fails to take out the high of Thursday. So I expect Thursday to form the high of the week. I expect that Thursday's high to stay protected. Then we drop to 20%, and as you saw, we just dropped aggressively, surpassing 40%. And at that, where we are right now, I'm expecting the market to form an intermediate term high on the daily time frame, because Nasdaq is at all-time highs and we have been just taking out all-time highs. So there is a moment in price where we expect the market to form an intermediate term high. Mind you, we are going to be trading to all-time highs. We are going to be continuing higher, but the market has to give itself a little bit of, if I can call it, room for things to be balanced. So everything in this world has to be balanced. So market has to balance all bearish and bullish momentum. So we expect a certain level of retracement back into the range. Okay, so this is how I expect the weekly to move. Now, if I'm to show you an example of that, Friday's range has totally made this week come back. Taking this off right there. Let me just delete all the drawings on this chart. Okay, so right now where we are at, you see the market has been, these moves that have been taking out all-time highs have been sponsored with big candles, and now as you can see, there is bearish momentum kicking in. So we drop bearish, we have a big retracement, we are having more of the black candles. So I expect the market, and you see we have one, the market retests into that, the pressure is falling. Now this fails to push price to higher sentiment. Okay, then this is what I was telling, that I expect the market to print in an intermediate term high. We have a short term high that was formed on Wednesday. We have Thursday forming the intermediate term high, then Friday forming a short term high. So this forms my intermediate term high. So I expect this to give me a drop lower, at least back into the range. Okay. So I wanted to look at this being Monday. So Monday, as you can see, we do not have market moving to any. If I'm to zoom in and pull your eyes onto that price action, I want you to look at these four candles. So this is Monday, this is Tuesday, this is Wednesday, this is Thursday. So this being Monday, we accumulate. As I told you, this is a bullish week. That depends on how Friday closes. This is a bullish week. We have the open of the weekly time frame at where Monday opens at. Now this is the weekly open right there, or you can call it Sunday's open, and I'm looking at this as a very big level for price to give me the reversal or to take this week into bullishness. So I have Monday opening up, we rally higher, we stay in that range. So Tuesday opens up, we take out the high that was formed on Monday and drop lower, taking out the low. So this Monday becomes our accumulation. As you can see, the market did not respect any side of the range, so we took out buy side and sell side for Monday, and the low of the week printed on Tuesday. Wednesday does not come back to take out Tuesday's low, so we rally higher, making this a bullish week. Thursday prints the high of the week. Friday drops back into the range. So if I'm to mark for you from what I expected the low to come from to the high, on Friday I'm looking at these levels. Now today, I do not know whether we have a news reminder. I checked Forex Factory, we're having nothing. I didn't think the market is going to reach my goals just with that speed, so I'm expecting the market to reach to those levels right there. That is beautiful market structure. So we rallied down, we have taken out the low of the week. Now this is a big retracement. If Friday's low happens to close below Tuesday's low, I'm using Tuesday's low as a level for entries going lower. Yeah, so thank you for watching. Let me see how much this range dropped. Oh my god, wow, it dropped going into the low of the week. Okay, so thank you for watching. Have a nice time.